Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the how to read candlestick charts fast. Candlestick charts are one of the most powerful tools in Forex trading because they visually represent price movements and market sentiment clearly and quickly. If you can master how to interpret these charts effectively and rapidly, you will be able to spot profitable trading opportunities before others do. So by the end of this video, you will know exactly how to identify key candlestick patterns instantly, understanding market momentum at a glance, and confidently make quicker trading decisions. So make sure to watch until the end because each step builds upon the last, giving you a complete strategy you can start applying immediately. So we start by understanding what are these candlestick charts and why they are essential. Candlestick charts are powerful tools in the forex trading, originated from 18th century Japan. These charts provide a visual representation of price movements, capturing open, high, low, and closing price for a specific period. Each candle on the chart tells a story. This is basically all these candles are not just candles, they basically show or tell a story of what's happening. The analogy or anatomy of the candlestick is simply yet informative. The main body or the real body shows the range between the open and the close. The main body of a candle shows a range between the open and the close. If the closing price is higher than the opening price, the body of the candle is typically green. If the opening price is higher than the closing price, it's typically green. This is what it says. Conversely, if the closing price is lower than the opening price, it is typically red. This tiny line extending from the body is known as the wick. These tiny lines you can see extending from the body is known as the wick, and it represents the highest or lowest price reached during that period. Candlestick charts are essential because they offer a wealth of information at glance. You can quickly assess whether buyers or sellers dominated a particular period by looking at the color or size of the candlestick body. The long bodies indicate strong bullish and bearish pressure. When you see a strong body, you notice that it indicates strong bullish or bearish pressure in the market. Now, short bodies typically suggest indecision or balance between buyers and sellers. The wick of a candlestick provide additional insight. Long wick shows that price moved significantly away from the opening or close price but couldn't sustain that level. This information can be crucial in identifying reversal or continuation in price trends. What makes the candlestick chart truly powerful is their ability to form recognizable patterns. These patterns, such as the doji, we can see the doji. I will draw an example. These patterns, such as the doji, this is typically the doji. It can be in a bearish or bullish form. This is the doji, followed to the hammer. This is the hammer. These are the candlestick patterns that we need to recognize. Then we have the engulfing. It can either be bullish or bearish. So these are signs of potential reversals or continuation that we look out for in the chart. Now, by learning to recognize this pattern, you can gain valuable insights into market psychology and make more informed trading decisions. Remember, candlestick charts are more than just price data. They are windows into the collective emotions and actions of traders in the market. By mastering the act of reading candlestick charts, you will be better equipped to navigate the complex world of forex trading and potentially improve your trading outcome. So let's see how we can read candlestick charts fast and the three-step method. To read candlestick charts pattern quickly and effective, you need a clear and systematic approach. This three-step method focuses on identifying the trend, gauging momentum, and spotting or identifying patterns. By mastering these steps, you'll be able to interpret the market movement effectively and make faster trading decisions. The first step is to identify the trend in which the market is going to. And as we can see, in this case, we can identify that the market is trending to the upside. We can see series this trend line, meaning that we are trending to the upside. So this is the first step, is to identify the trend. Candlestick charts are excellent at showing whether the market is in an uptrend, downtrend, or moving sideways. A series of green candles signifies bullish trend, while a series of red candles signifies bearish trend. Now, strong bodies are large bodies. When you see a series of large body candles to the direction of the market, signifies that it's a strong trend. While you see series of small bodies, it indicates they're in a consolidation or indecision stage. This is typically what you need. So notice how the trend becomes visually apparent when consecutive candles align in one direction. As we can see, when consecutive candles align in one direction in this area, we can see the trend is showing us its hand. This is the foundation, recognizing the overall market movement before diving deep into specific details. The second step is to gauge the momentum. To gauge the momentum, you reflect on the strength of the price movement during the candle time frame. When you see larger bodies, it typically indicates strong buying pressure. Larger bodies indicate strong buying pressure, while the small ones indicate weak or indecisiveness in the market. The wicks are added or are additional layers of insight. When you see a longer wick, it shows that market moves in a significant but it couldn't sustain those levels. That's signaling volatility or potential reversal. This is what it means. For signals, for instance, if a long candle, let's assume a long upper wick candle and a small body, might indicate buyers might be pushing price higher, but ultimately we are overpowered by sellers. When you see something like this, a longer upper wick candle at this area in the market, let's use this side, you can see buyers were ultimately in the market. This upper wick indicates that they were at one point in the time in market, buyers were in this market before ultimately sellers came and pushed it to close below. This is what it means. So observe how candles with long wicks often appears near your key turning point in the market. Your turning points in the market. This insight could help you anticipate potential or reversals that might possibly happen to shift the momentum in the market. The third step is to spot your candlestick pattern. Instantly recognizing the pattern like hammer, shooting star, bullish engulfing, or morning star can provide valuable signals about upcoming market movement. Remember, if you do not understand market candlestick patterns, you can check out our videos to get a better understanding on that. For example, if you spot a hammer, if I spot a hammer on the bottom of a downtrend, when market is trending or retracing to the downside, it suggests that buyers are regaining control after significant selling pressure. That's what it means. And a potential reversal would be on your hand. As you can see, after this series of pullback in a bullish market, and we saw our hammer, it indicates that buyers are coming into the market. Similarly, when you see a shooting star at the top of a range, when you see a shooting star at the top of a trend, it signifies that sellers are pushing back the price against the upward momentum. If you spot a bullish engulfing, remember, if you spot a bullish engulfing, a large green candlestick that engulfed the previous candle, if if e engulf the previous red candle, it indicates that there is a strong buying pressure that could lead to further price increase. This is what it means when you see a bullish candle of this sort, including this bullish candle. As long as it engulf the previous candles, it signifies that buying pressure could lead to further price increase. Recognizing this pattern quickly allows you to act decisively when the opportunity arises. By combining these three steps, identifying the trends, gauging the momentum, and spotting your patterns, you can read candlestick charts fast and effectively. Practice scanning charts for these elements constantly to sharpen your skills and build your confidence in your trading decisions. So alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.